You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome back to Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. as well as from the network upon which all of you folks have been mainlining these days. Hope you're having a good trading week out there. If I sound a wee bit different, it's because I'm coming to you not from the Chi-Town studio, but from the Southern studio, where everything apparently decided to melt down simultaneously the second we hit start on the show. Listen, you should see the absolute mountainous array of gear I have here that is all completely not working. So we're going to go old-fashioned way out here, listeners. We'll see if we can cobble together the live stream for you out there. But either way, a lot going on. And joining me to parse a day that has the actual temerity to sell off, to go red. I didn't think that was possible. It's our old pal, first off, beaming in from the world of the Kelly School of Business, where he's corrupting young minds of the future, one mind at a time, Mr. Russell Rhoads. Mr. Rhoads, how goes the corruption, sir?
The corruption goes quite well. It's the beginning of another quarter. I'm all fired up to mold, and it's actually adult minds. I'm only teaching in the graduate school this fall, so get a lot of very interesting life questions from the grown-ups.
Oh, there you go. I like it better when you're corrupting the young minds. That makes it more fun.
That's the spring. Then I get to go on spring break with them, and it's all downhill from there.
That sounds like good stuff. And then also joining us, he's corrupting minds of all ages. He is the greasiest of meatballs himself, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, how go things in the land of the pit? How are the pitties these days?
We're doing great. We're having a hootenanny here today.
A hootenanny. It sounds like you might need the old Cracker Barrel logo come in down there at some point or another. Who knew we'd all become so well versed in graphic design this week in the world of Cracker Barrel? But that's the world we live in, listeners, as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down what the heck is lighting up the tapes and indeed our screens out there. And as I alluded to at the start of the show, it's not your average day out there, listeners. Why? Because there's actually red on the screen. We haven't seen this color in a little while out here, listeners. In fact, it's been naught but green. Of course, a week ago, last Friday, when I was traveling for the big day, the ultimate annual holiday in all things vol and option circles. And so we had no show last week, and the market apparently took the Jackson Hole speech, just took the bit in its teeth and ran with it, like Powell came out and said he's cutting rates tomorrow. So he had a massive rally, vol taken to the woodshed, mostly drifting up this week as well, mostly green on the screen. And then coming into today, S&P off now 0.75%, Dow off 1/3%, NASDAQ off over about 1.33% right now. So NASDAQ leading the charge in the wrong direction. Once again, if you are in the tech heavy NASDAQ, you're feeling a little bit more pain out there today. And VIX cash popping back to, it was when we kicked off the show at about 15.75. That puts it up about 0.75 of a point right before showtime. It has come back to earth a little bit since then, down to about 15.35 right now as we're talking. So coming in about 0.4 of a point from that high level, but still up, actually moving back up. We haven't seen that in a little while as well. Volley, Mr. Nation's just the facts, ma'am, at the money vol measure, 12.25, up about 0.5 point. I'm sure if I re-rack that right now, it'd probably be right around a 12 or so. And then our old pal VVIX, the vol of vol itself, 96, down 1 point from where it was this time last show. So a lot to unpack. Let's go around the horn the opposite of the way we went. Let's go out to the land of the pitties. Mr. Pitt, sir, what's catching your eye in a intriguing vol week back north of a 15 handle, at least for right now?
Yeah, I got to tell you, I'm a little surprised. The economic data today was kind of a nothing burger. I guess Chicago PMI wasn't great, and consumer sentiment was off a little bit, but it wasn't that big of a deal. I think this is just we're heading into a long weekend. I believe we've got a price in that gives Trump an extra day to drop a Trump bomb, and so you've just got a little bit of reflation into volatility, and the market's giving away a little bit of what they'd picked up last week. That we had gotten over 6,500 there briefly, and I was as surprised as you. But what's interesting is that despite all that data, we'd been so rate dependent, the bond market, and I looked today and they're actually upping the odds of a rate cut in September out to December. Little bit curious as to why we're getting that out of the volatility. We're through earnings. We have one earnings that matters left. That's Broadcom on Thursday. So it's a little curious. I think they're just kind of maybe they felt like they took weekend risk down a little too much, and the shocking thing. And Russell, I'd love your guys' opinion on this. Do you know what the straddle was into PCE last night? If you'd have bought at the end of the day, do you know how much the 6505 straddle cost you? Take a guess.
So 6,500 straddle, end of day. So you're talking like the last 20 minutes?
Yeah, last 10 minutes.
Let's say $25.
Yeah, it's dead on. It was $25.
It's like I've done
50.
this once or twice.
Yeah, we're down 50. Into that event, we're down 50. At the low, you would have been selling that put at like $65 and be sitting on a free call. They are completely mispricing event risk right now. And I think it's primarily due to the fact they're expecting an influx of premium sellers the next morning. And so they're trying to get out in front of that. It's just kind of it's really stupid.
Let me ask you something really quickly, just what you were just talking about, because we had no show last week, and obviously it was a big deal. The market just ripped up like crazy last week. You said you were kind of surprised to see them pricing in so many rate cuts going out into the future. I read the Jackson Hole speech. I didn't really take it as like, hey, I'm cutting rates tomorrow, let alone throughout the rest of the year. Seemed like the market did. What were your thoughts on what we heard from Powell and the surprisingly strong reaction as a result, sir?
Yeah, I mean, it was just kind of a shift in tone. He'd gone from like feeling, even at the previous Fed meeting, he had sounded pretty hawkish. and his tone shifted to being open to rate cuts, and he kind of opened the door. And rate cuts are like Pandora's box. You open that box, and everyone's gonna be like, rate cut, rate cut, rate cut. And I'm not sure that we should want rate cuts as much as we think they are. I think historically that they're not good for the market. That's more of a Russell thing, but I don't think it's that great of an idea to cut rates when inflation is still there. We just passed this giant stimulus.
Inflation has not gone away. That's the best part.
No, we just passed this giant stimulus, and the only reason why the unemployment rate is still 4.1% is because we're drastically reducing the workforce via deportation. So it's a strange. I think there's more inflationary pressure than there is economic risk, frankly.
Yeah, it's wild. It does seem, and I don't want to turn this into the beat up on the Fed show, listeners, because certainly there's a lot of people out there doing that. But it does seem like there is definitely a contingent of the audience out there who just thinks the Fed exists solely to provide the Fed put and to drive up equities. And there's no other reason for their existence. And so from that landscape, from that lens, sure, cut rates all day long. But there's a lot of other things out there that maybe aren't entirely hunky-dory. That said, Mr. Rhoads, you're out there corrupting slightly older minds these days. Yeah. What were your thoughts on the data we saw? Data that was a speech last week, and the results we saw from the market, and then B, as Mark alluded to, now kind of pricing in some a little bit more on the rate cut side going down the road, and then C, what is catching your eye in the vol market today, sir?
Sure. Well, what's funny about last week, not the week that we're finishing up right now, but last week was on Monday. The Fed odds for September were 84%, ground down to 72% Thursday on the close, and then popped right back up to 82%. So we ended the week where we started as far as the September odds go. Where the big move is in all of this is in the 2, 3, and 4-year rates. That's where we saw the biggest drop. And honestly, I think that's because the market believes that whoever replaces Powell is going to be really aggressive. But so that's really where you're saying, I mean, we don't know who it is. We don't know what the market situation is, but you look at the yield curve right now, and then you look at the week over week change last week, and it really was the 2-year, the 3-year, and the 4-year rates that took the biggest dive after Powell was talking. So I think it's a matter of the market being a bit resolved that he's going to cut rates a little bit with the time that he has left, and then it's going to get even more aggressive farther out. And I wonder if that more aggressive farther out is what really pushed the stock market up and volatility down, as opposed to what people expect to happen in September, October, November within the equity markets.
That does make a little bit more sense. If you're pricing past Powell, that makes more sense.
and actually, and where I came up with this, honestly, was I was teaching fixed income last night, and I pulled up the term structure on a week over week basis, and I was honestly floored by what was going on in the 2, 3, and 4-year tenors were the ones that got hit the most on a week over week basis last week. Or I say week over week, looked at it just before Powell spoke and looked at where we are now. And we do see that if you go farther out on the Fed odds, they really were sticking around our rate cuts bottoming at 3% in December of 2026. It now looks like they expect the rates to continue to trend lower, and they've already taken 10 basis points over the last week out of the December of 2026 number. So there's which I don't really, the thing that I don't get is, do you really think that the economy is going to be so terrible over the next, year and a half that they're going to continue to have to cut rates? And are you of a belief that we will get no scary bouts with inflation between now and, which I've been hanging my hat on that one And, you know, you hear people talk about people being tired bears because they've been short the S&P for too long and they give up. I might be tired on that one as well. Just not understanding why everybody thinks we need all of these rate cuts. Because
rates exist solely to be cut, sir. There is no other reason.
Yeah, that's what the Fed is supposed to do. And I really, if I were, I did, Indiana had me talk to somebody from the Financial Times right before Powell spoke. I don't think it got in an article, but what I was saying, you know, they were like, what do you expect him to say? And I said, you know, this is probably his last, it's his last Jackson Hole as Fed chairman. I did say probably to hedge myself, but I would have gotten up there and I would have, and this probably would have really hurt the markets, but I would have used that as a bully pulpit to talk about how the other side of government, the fiscal side, has got to help with the economy. We've been relying on the Fed for way too long. And I'm going to get off the soapbox on that one because I could waste the whole show about what I think about that.
Can you imagine if he did that, if he just got up there and just let it all fly? Just said the hell with it.
I would have done. I mean, the elected officials are not pulling their weight with respect to the economy. And then when things go wrong, they point fingers at the Fed. It's time for both sides to do the work.
That is... Are you implying elected officials aren't efficient or great at doing their jobs that they're supposed to, and they're mostly just trying to get attention so they can get votes? That's crazy talk.
You know, my daughter's a journalist in D.C., and I don't want to piss off all of her sources, so I'm not going to say anything.
Right. I do like your image, though, Powell. Just throwing caution to the wind.
He likes to talk about. He always in whenever he speaks. You know, he always talks about the dual mandate of the Fed, and nobody pays attention to that. But he is saying, when he says that, he's saying, we're not here to prop up the market. We're not your put. I mean, really, that is what he's saying. But 99% of people don't get that that's what he means when he talks about the dual mandate. The dual mandate is we're here to have the best employment situation and the lowest inflation that we possibly can. That's what we're here for. We're not here to bail out banks. We're not here to figure out who gets elected or any of that other stuff.
Yeah, that rally last week was, you are our puts and not else. And that's what you're here for. Now sit down and shut up and cut some rates. Let's keep rolling out to the land of the vol surface, shall we? Listen to see what's popping off. As we're kicking off the show, like we said, VIX cash vacillating around 15 and a third, 15 and a half. Coming in right around 15 and a half right now. That SEP future at a little bit north of a 17, about a 17.10 as we're coming into it right now. And then you get out to October and you get a little bit of juice percolating in there at about 19 and a quarter. So a nice little evolution to the front. Then we hang out there around a 20 handle through December, topping out at about 20 and a half. Then we kick off next year, a nice little bump up again up to about 21.40. And we kind of hang out in that range up to about a 22 all the way through the end of April into May out there. So Mr. Meatball, we'll start with you. You've been kind of surprised by the shape of our curve for a little bit now. What's catching your eye out there this week, sir?
Yeah, I mean, we continue to see a lot of air between the futures and the VIX cash. You know, what's kind of interesting today is, you got the VIX up $1.20. VIX futures are up. 1 second, I'll tell you. They're up 30 cents. And they've got 3 weeks to expire. So, you know, they built all that air into the September future and the October future. And then we actually get kind of a little pop here, and they don't react because they're already pricing that move in. Now, if things calm down and we see the VIX start to pull back again, you will see, I mean, the amount of potential opportunity in, you know, September puts and October puts on VIX options is going to be really interesting. And then, you know, Russell really pays a lot more attention to the back end of the curve, but that looks frothy as well. Notably, maybe May hasn't really traded yet, but notably, like, you know, when you go out to Feb and March and out to May next year, there's a lot of air between the futures and the cash index.
A lot of air indeed. Yes, I was kind of just looking at that while you were talking. Mr. Rhoads, same question for you, sir. What is catching your eye out there on the vol surface this week?
Well, yeah, today, I'm Mr. Calendar, and we do have that 3-day weekend in front of us. So I am a bit surprised at how much spot VIX is up. But, spot VIX is driven by S&P 500 index option activity. I assume we all know that. And if you're going into a 3-day weekend and there's all kinds of craziness in the world, maybe you and I'm going to use one of my old Southern brokers phrases. So maybe you buy yourself some out of the money puts and put them in your back pocket. And maybe they pay off this weekend, but at least you sleep a little bit better. So I do think that there are probably some people that are taking some short-term hedges into the holiday weekend. You never, one of the things that a lot of people that we used to pay attention to, and then I think has fallen off of people's radar, is a lot of the major economic numbers that come out of China come out on Saturdays, and I think I do think we've got a couple of those that are staring us down as well. So it could be somewhat of a precarious weekend. Normally, when we go into a 3-day weekend, the futures would be moving more than the spot. But as Mark Sebastian put it, there was a lot of distance, a little bit less now, a lot of distance between spot and the front month September. If we were talking about this yesterday when the spread was almost 2 points, we'd be like, holy crap. Up over $1 on the day before a holiday, even with the S&P not down that much. It's down, but on a percentage basis, it's not down that much. There's some worried folks out there.
Yeah,
and just one other little thing. The December at a 30-cent premium to November, that's not supposed to be, guys.
Yeah, I mean,
it keeps widening too. I've said that multiple weeks in a row. Yeah,
there's still a hitch where December looks not as smooth. But you're right, December is trading below November.
Yeah.
When is the new? When do they nominate a new Fed governor?
It's early next year, but he's already given an indication as to what he's going to do. But I feel like it's March, April, May, sometime next year, and that might be why we see those. When you were talking about it, talking about April, May. I think that's why we see maybe a little bit of elevation there, and a little bit of activity. There's 1,600 open in April.
Yeah, speaking of a little bit, the December contract expires on the 17th. Maybe they're thinking that's not going to have like the full Christmas, stuff priced in yet, and so they can leave it a little bit higher.
Yeah, we were just looking at that.
We were just talking about a big block of, I think they were the D15 puts for 24 cents trading for size. Do you see those, Mr.?
Why that's
I could see that.
Do you want to know why that's holding up, Russell?
Why?
That Fed meeting on December 10th.
Yeah, that explains it. And that's an uncertain meeting. That's perfect.
It's a very uncertain meeting. If you look at the Fed watch, they're all over the place then.
That's where he does it, Russell. That's where he goes crazy.
Yeah, that's actually where right now the market is pricing in a little over a 50% chance of a cut. The market is pricing 2 cuts, one in September, and then I would say leaning a bit toward December, but we could get it in October. So that uncertainty around that is elevating the volatility. That's a perfect call. That's why I do this show.
And that's why they're pricing in. That's when Powell goes nuts. He just reads the riot act to the rest of the market out there. Yeah. Speaking of going nuts, it's not quite going nuts, but something's going up in VIX recently, because all of a sudden earlier today we were hanging out around 200,000, 250,000 contracts, and now we're threatening 700K, 692,000 contracts as we're kicking off this part of the show. So something going up. We'll find out what it is in a second, listeners. But first, out to the land of the top 10 we go in VIX options, listeners. If you're hanging out looking for a few puts, you got 3 to choose from this week. So that is a veritable put palooza out there, listeners, including number 10, 188,000 of the September 17 puts kicking us off at number 10, listeners. Number 9, 190,000 of the Sep 20s. Number 8, right to the fun, 197,000 of the no doubles, the no 55 calls. So the 47 halves don't do it for you. Here's the doubles at number 8. Number 7, 216,000 of the SEP 80s. We're getting all kinds of fun in here. Number 6, 245,000 of the September 16 puts. So that's 2 of our 3 puts. Number 5, 250,000 almost exactly of the no 47 halves. We'll come back to those, I think, a little bit later. Number 4, 259,000 of the SEP 25s. Number 3, our final put in our top 10 this week. Can you guess the strike, listeners? Not the 15s. We just talked about the 16s. It's the 15 halves. 266,000 of those bad boys. Number 2, 277,000 of the SEP 35 calls. And the big dog out there in VIX land right now, 292,000. So nearly 300,000 of the October 60s, 6 O's, wild strikes. Now, in the past, we've seen a lot of that paper be part of various funky ratios. We'll have to dig and see exactly where that paper emerged. But before we do that, listeners, it is time to unleash the orange beast that is Dr. VIX. You can't see him on video, listeners, but I do. And he is glaringly orange as we keep on rolling into Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
And it's funny because I've finally figured out why we use clown music when I do this, because some of these trades are just a clown show. and this is the clown show week for some of these, and I say all of that, and VIX is going to spike up to 80, and these trades are going to be genius. But on Monday, with a minute into the trading session, in VIX at 1503, somebody sold 150 of the August 27th, 16 calls for 35 cents, and they bought 150 of the September 10th. They skipped the September 3rd, 16 calls for $1.65. It looks to me like it was a rolling transaction. Now let's get into the silliness. With VIX at 1506, and it really does not matter, somebody bought 450 of the September 3rd, 80 calls for 2 cents. No spread, no nothing. 2 cents. Go you. With VIX at 1466, and this is still on Monday, somebody bought 1,000. This is probably the trade I like of the day. Bought 1,000 of the September 3rd, 15 puts for 16 cents. VIX was at 1466. The break even on this was 1484. These do expire next week. Tuesday, with VIX at 1490, somebody bought, and here, if you're looking for the title of this program, it's I Can't Drive 55. The double calls, it's like a calendar, stupid, with the double calls for the rest of the week. With VIX at 1490, somebody bought 900 of the VIX September 10th, 55 calls for 6 cents. And then a few minutes later, somebody bought 900 of the September 24th, 55 calls between 16 and 18 cents. I did go check to see, because I'm only, this is about weeklies, but I did go check. There was not a similar trade using the standard September 17th option. So they're only using the weeklies for this. On Wednesday, somebody bought 500 more of the September 10th, 55 calls for 60 cents, 6 cents. And that was with VIX at 1496. And then I think here's a decent call if you think we're going to get a spike in the next 2-3 weeks. Again, on Wednesday with VIX at 1486, somebody bought 500 of the September 24th, 22 calls and sold the 29 calls. They did that for a cost of 48 cents. I think that'd be a great trade for him if we spike up to 25, 26 and the options react accordingly. Thursday, we got October 1st options. Yay! And somebody with VIX at 1427, somebody bought 160 of the October 1st, 37 calls for 41 cents. Somebody bought 100 of the October 1st, 55 calls for 21 cents. And this is a trade I really like as opposed to those other two. With VIX down around 1415, somebody bought 500 of the September 3rd, 15 puts for 20 cents. Got a break even of 1480 while the index was down at 1415. Today, 30 seconds into the regular trading session, somebody should get fired over this. Somebody sold over 1,000 of the September 3rd, 14 and a half calls at 8 cents. They were 11 by 14 at the time.
That's just excellent all around. I love.
But and it was 30
it.
seconds into the trading day. You know, it's like a panicked sell in a whole bunch of lots in the first 30 seconds. So. And then the crazy trades. With VIX today, with VIX at 14 3/4, somebody bought 163 of the October 1st 55 calls for 20 cents. Somebody bought 227 of the September 24th 55 calls for 19 cents. More recently with VIX up at 1587. And, somebody has to top the 55s. Remember when we weren't allowed to drive faster than 55 miles an hour? VIX at 1457, somebody bought 222 of the September 24th 60 calls for 14 cents.
I think this entire show for years now, you've been subtly planning how to work in a reference to the solo career of Sammy Hagar, and you have finally done it, sir. Congrats to you. Probably the only solo Sammy Hagar song anyone can name, myself included. I don't know of any others, but I Can't Drive 55. Pretty darn good song. I don't know if any of these trades are pretty darn good. I don't think I would describe any of them on the double strike as that, but somebody clearly has a big axe to grind. Listeners, you like any of these double calls? pick your crappy poison, listeners. You have an embarrassment of riches out there today. All right, to the rest of the week we go. Let's see if we can top Russell's 55 fun out here this week, listener. Like we said, today getting surprisingly spicy after doing a heck of a lot of nothing. Nearly 700, probably about exactly 700,000 contracts on the tape right now. The hot option out there today in VIX land are the OCK 31s, going up for an average price of 90 cents, 155,000 times, listeners. I went and looked just to see. Usually that kind of stuff is part of a ratio or a vertical or something else. I don't see any other legs. Those are just straight up. They went up in one print of 130,000. Again for 90 cents. So that one kind of struck me as odd. It seems like the perfect fodder for a flash poll, which our producers have done right now as we speak. And if all my machinery here in the Southern studio will play ball with me, I will give you what our audience is thinking right now in terms of that. Let's go to that right now, listeners. All right, here we go. That is not playing ball with me. All right now, of course, our audience is exactly split 50-50 on whether they want to buy or sell. Again, these are the 31s, listeners. OCK 31s, 90 cents. Our audience cannot make up their minds. It just went live a few minutes ago. We'll check in on that again as the show progresses. But that one just struck me as odd. You don't see a lot of solo upside these days. At least there could obviously be other things against it, OTC or futures, but solo on the options side, you don't see a lot of that. Number two, 60,000 of the SEP 17 have puts. Number three, about 45,000 of the OCK 25s. My first thought was there was some ratio with those, but that is not the case. Number four, 30,000 of the October 16 calls. That's an interesting one. And then number five, rounding out our most actives today, 30,000 of the September 20 puts. So we are all over the place in terms of strikes, in terms of in the money, wild out of the money. Yesterday, 671,000. So we already beat yesterday by today's numbers. 49, almost 50,000 of the SEP 25s. That was your big dog. That's 25 strikes seems to have merited some attention out here this week as well, because number two, 36,000 of the OCK 25s. Number three, 35,000 of the September 17 puts. Number four, 31,000 of the SEP 15 puts. And number five out there, the only opening position on our list yesterday, 30,000 of the OCK 16s. Out to Wednesday, that was, so far at least, our banger day of the week. 1.04 million contracts on the tape. The big dog looks like it came as maybe a roll. We've been talking for a while of those no 47 halves. They've just been, someone had a lot of love for that strike for a long time. They were open in size for multiple months, but the biggest position was in November. It looks like they may have rolled 160,000 of that on Wednesday, which obviously accounts for 320,000 of our 1 million contracts out there, because 160,000 of them, no 47 halves, going up against 160,000 of the Feb 47 halves, definitely opening on the Feb. So maybe taking advantage of an opportunity to roll. Interesting that they don't roll down and strike at all. They still stay with that 47 half strike. It always put a smile on my face, their strike selection there. Number 3, 56,000 of the SEP 25s. Number 4, 43,000 of the October 18 puts. And rounding out the top 5 on a pretty active Wednesday, about 41,000 of the SEP 30s. Tuesday, not much on the tape. That's kind of your dog days of summer day, 478,000, the hot option such as it was. 27,000 of the OC 60s, followed by number 2, 27,000 as well of the SEP 15 puts. Number 3, 25K of the October 18 puts. Number 4, 25,000 exactly, not even a one lot extra of the March 18 puts. Those were clearly opening, not a lot of OI in March. And number 5, 20,000 of the SEP 30s. Winding down our week on Monday, a little bit more activity there. 654,000 contracts on the tape. The hot option on Monday, 45K of the SEP 25s. Like I said, if it wasn't for Russell's 55 love, I'd say the 25s were our strike of the week. Volume-wise, they beat out the 55s, but the 55s have a little bit more magnetism to them, shall we say. Number 2, 43,000 of the SEP 18 puts. Number 3, 35K of the SEP 15 puts. Number 4, put Palooza here, listeners, 25,000 of the SEP 17 puts. And then rounding out our top 5 on a decently active Monday, 23,000 of the September 17 calls. Mr. Meatball, we got stuff all over the place this week. OC 31s for size, a whole mess of interest on the 25 strikes in September and October. We got maybe rolling the 47 halves. We got a whole boatload of puts. What was catching your eye out there in VIX options this week, sir?
Yeah, I mean, the biggest trade all week, now discounting that roll, which was just kind of moving a position, but kind of the biggest opening trade we've seen this week happened today, and I kind of freaking people a little bit, but that purchase of like 130,000 of the October 31 calls is today. Pretty interesting. They're looking for those to win. They paid 90 cents. For those to win, we'd need a 50% increase in the VIX future. Now, obviously, if we get a little bit of a pop in VVIX, those can go up from volatility, but it's not like VVIX is particularly low. With VIX at 15, the VVIX is near 100. So the options are not cheap, and normally when VIX gets down 14, 13, you expect VVIX to be in the 80s, not near 100. So they paid up. I don't know what's coming in October, but they paid up.
Yeah, that seemed a little juicy to me, 90 cents for those bad boys. But you're right, VVIX has been stubborn, and when that's the case, the premiums will remain stubborn as well. Let's keep on rolling out to the land of both of your favorite product categories, inverse vol. Mr. Rhoads, we'll start with you, sir. SVIX, as we kicked off the show, almost at a 20 handle, 1990. We did get north of the 20 handle a few times during the week. That still puts it up almost 1.5 points, about 1.4 points from our last show. Putting up about a day's worth of paper already, 5,300. The ADV, though, is only 4,800. So it doesn't take much to put up a day's worth of paper in SVIX. That said, and not lest we forget your favorite, most boring product on the planet, Mr. Rhoads. VYLD 26.57, up nearly 50 cents. Can you contain the excitement? Mr. Rhoads, what's catching your eye out there in inverse vol, sir?
Well, first off, you badmouth it, but VYLD is up 6.3% since its launch.
I love how you're bringing out these post-launch statistics.
But here it goes. SVIX is up 33.5% now since VYLD because of the last couple of weeks.
Been a good couple of weeks
for the
out there,
longest time. VYLD was doing better than so. Yeah, it's SVIX we're back in normal contango with, as I like how Mark Sebastian kept saying, a lot of air between them. You got a lot of air between futures. That sure helps the short volatility ETF. Does. So, just wish I had more. That's all I have to say about that.
Yeah, I mean, to your point, Russell, when you have a lot of air, these inverse ETFs are not going to, because the futures don't react as much. When you get a pop, kind of a one-off pop, which today might be, SVIX and VYLD aren't going to lose very much. And just like VXX and UVXY and UVIX aren't going to gain as much. And then if that air pocket re-expands and we don't get anything into expiration, those two have to meet. They cannot stay where they are. All right. And yeah, you could say the VORP is a little bit not exactly the same as VIX itself, but it's usually within about 25 cents. So I didn't think I was going to get to say VORP today.
I was going to say VORP. Sounds like the Vorpal blade of D&D fame along those lines. I'm sure a lot of our listeners had a chuckle at that. But you've been out there running an inverse vol newsletter and in some, shall we say, challenging times. Last couple of weeks have been good. What are you up to? I know you said you were actively, aggressively overwriting SVIX a few weeks ago. Are you still doing that? Are you letting it run a little bit?
If you're going to overwrite on something like SVIX, you got to be pretty strategic about it. So I'm kind of doing it when that air pocket's at its widest, and I have a real good idea of how much SVIX can go up. That's when I'm doing it. So with this move today, with this little pop, this is a day to be closing those calls, not a day to be buying them. Or not a day to be selling them. We get some re-expansion of that air pocket. I'm going to be jumping back in to sell calls.
Yeah, it has been a decent run. I've kind of been letting it run a little bit the last few weeks, but it could be a good time to get back in. Speaking of get back in, you got a rare opportunity, listeners, with UVIX and UVXY both hanging out at the exact same price level. We don't see that too often out there, listeners, in the land where everything is eroding like mad out there. Both UVIX and a UVXY hanging out at pretty much, if I could type the right ticker in, that would probably help. UVXY and UVIX both hanging out at pretty much exactly a 12 handle right now. So pick your poison. Which one do you like better, listeners? UVIX putting up 35,000 contracts right now against an ADV of 42,000. By the way, UVIX is down about 2.25 points from our last show versus UVXY, also hanging out exactly at 12 handle right now, putting up about 101,000 contracts against an ADV of 100,000, down about 1.5 points. Mr. Meatball, gun to your head. You got to go UVIX or UVXY. Both hanging out at a 12 handle. Which way you going? It's just rare to see them both hanging out at exactly the same price level.
If I'm looking for movement, I'm always going to go UVIX. It's a better constructed product as it stands now. Like, do I really like? It's 2x is much easier to do in your head than 1.5x.
Yes, that's true. For simplicity's sake, it is better. I was trying. I thought this was an opportunity that I could sneak in some of the UVXY defense for us. They always complain they don't get their love on the show. It's because your product is a neutered product. What do you want me to say?
Exactly. It is not the UVXY of old. And,
no, as someone who had UVXY calls,
I like it.
Overnight during the great neutering, as I've said many times, never again out there in UVXY. Mr. Rhoads, anything else catching your eye in both UVIX and UVXY hanging out at a 12, and our old pal VXX 36, so giving up about 3 points, still a long way to go. I forgot who wrote in, said they were on the 20 handle in VXX, but I hope you're out a long ways wherever you work, because you've got a ways to go to get to that 20 handle. Mr. Rhoads, anything catching your eye in the world of vol ETP, sir?
No, just buying my UVIX for the weekend. I actually just bought it because my daughter is off at college and she drives a Jeep, and I just took the top off of it. So I'm just gonna go drive around the rest of the afternoon now that she's not here. And nice. Because of that, I'm gonna miss the close.
You're gonna drive around with a Jeep.
I'm running errands with the Jeep. Let's top off the Jeep. You see what it's doing in Chicago? You're not here.
I can't.
It's 75 and beautiful.
I can't possibly buy UVIX. I'm in a Jeep with no doors. And
I gotta go. I gotta do my trade now, because as soon as we're done, I'm
Russell.
Cooling.
You know what?
I'm cruising. I'm cruising.
Russell, have you ever been in Nashville, Indiana?
Yeah.
Have you been in the Nashville house yet?
No, I have not been to the Nashville house.
You gotta go.
Okay.
You gotta go. Put that on your list.
Yeah, they send me all over the state. It's great.
They've got these because my mom went to Indiana, right?
Yeah.
And my uncle and my aunt and my grandpa.
You got Hoosiers that, the Sebastian family is a basketball school family. I know that.
Yes. I was born in Indiana. I'm an Indiana of birth. My parents were living in Hinsdale, but my mom always went back home to have babies. But anyway, Nashville House. Drive there, get some. They've got like this bread biscuit thing that's really good.
Okay. I will ask some of the local Hoosiers about that one.
A plug for Nashville House out there,
listeners. You can send us Nashville House. You can send your check to Mark Longo.
I'm still waiting for that Skippy's check from about 10 years ago. I plugged that place how many times? Nothing. I roll into that place.
In St. Charles.
Skippy's Gyros and Lemonade. I've rolled into that place and they don't give me anything. So they're dead to me. As we keep on rolling, listeners, let us go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we get weird, we get wild. And things are getting wild here in the Southern studio. I just spilled beverage all over the place. So things are just going crazy over here. It's a wild day. Nothing's working. I'm spilling things all over the place. Good time to wrap up the show maybe a little bit early. By the way, if you're wondering how we're standing right now on our great OC31s for 90 cents flash poll, our audience wants to sell them now. 60% of you want to sell them. 40% want to buy them. So interesting stuff out there. That'll be live throughout the rest of the day, listeners. So if you're listening to the podcast, you'll be able to vote as well. All right. Obviously, no show last week, so we don't have predictions coming in from this week, but it wasn't myself on the show. It was Russell, it was the Meatball, and it was you and Sinclair. All of us were hanging out at about Russell Sebastian was at a 1441. Everyone else was at a 15.5 or higher. You were tempted to go a 13 handle, as I recall.
If you look last Friday, 1441 was pretty good for the 1 week.
Yeah, you had a minute there. Yes, you did. You did have a minute there.
Actually, it was really brilliant up until this morning.
You had a shining moment in the sun out there. Well, tell you what, since you were so avant-garde with your pick, I will let you go first for this time next week, sir. What are you feeling? Are you dared to say a 1331?
You know, I'm trying to think. So next Friday we'll have gotten non-farms that morning. We'll be through. There is one big earnings that people need to pay attention to for next week. That's Broadcom. A lot of people don't realize Broadcom is bigger than Tesla.
It's I just sorry to interrupt you, but I got interviewed about the Mag 7. It has replaced Tesla in the Mag 7.
Well, I call them the great.
A lot of people have thrown Tesla out and put.
Yeah, well,
Navigo, AVGO or Broadcom in there.
Yeah,
sorry, go ahead.
I call them the grade 8 because they're all over $1 trillion. And, at some point it'll have to be the nifty 9 because Taiwan Semiconductor is going to get there soon. So you heard that, folks, the grade 8. And then when Taiwan gets over $1 trillion, we're going to call it the nifty 9. So my question is, do I go 1551, 1441, or 1661?
Such an embarrassment of riches.
1331. I'm gonna do it. We're gonna have a vol implosion next week.
Wow.
1331.
Buy all your SVIX now, listeners.
I am Texas hedging my position.
Buy all those 15 puts we were just talking about earlier. Buy the SVIX. Buy it all, listeners. 1331. Wow, you've spoken it into existence. It is now official. That means we are heading there. I will go next just to give Russell a little bit extra time. I already wrote mine in while we were talking. I'm going to go the other way. I'm going to go almost exactly 3 points north of you. I'm going to say 1635. For some reason, a little bit of extra juice. That doesn't help my book, but I have that feeling in there. And Mr. Rhoads, you get the choice. We have 3 points between us. A lot of places to go, sir.
You could drive a truck through that.
I had written down 1636.
Did you really?
Right there, man. So there.
I hope for both of our
1490. I'm going 1492. I'll split the uprights.
You got to keep it now. That's kind of funny.
No.
I think that's hilarious. You literally carped me by 100.
You totally priced
I had just written it down, and you said it, and I was like,
"That's hilarious." That's the kind of thing. If you were next to me in the pit, I'd have to legally obligate
Mark, if you want,
you in the
I'll
face.
We can get
Well, and
Russell
so-
1636.
No. So here, I'm going to tell you exactly. So I actually gave into a little behavioral finance stuff there because I was thinking 1492. I like to go historical years. And then Mark Sebastian went so low, I was like, all right, well, I'll kind of go equidistant high. And you beat me to it. So I had actually written 1492, then I scratched it out and wrote 1636.
All right.
But so I'm going back to 1492.
1492 with the special.
That was my uninfluenced.
I hope VIX cash is like 1637 this time.
I do too.
That would be absolutely hilarious. I wouldn't make money on it, but it would be funny for the purposes of the show, listeners. All right, that is going to do it for our Vol Views from the Southern studio. Seems like everything worked enough to get the show done, which is nice, even though I'm covered in various beverages here as we speak to wind up the show. But before we go and before Mr. Rhoads takes the roof off his Jeep. By the way, your strategy, Mr. Rhoads, is kind of tailor-made. You're the only person I've ever said this to where your strategy is tailor-made for a market on close order. I've never used one of those, but that would seem to be the reason that idiotic order was designed so you could go ride around in your Jeep.
Exactly, but I'm not doing that. I don't trust them.
You'd rather take 2 hours of delta risk.
I'd rather take. You know what? And actually, the way the market's, I say this, but the way the market's acting right now, I'm not particularly worried about it. But we'll be unchanged on the day.
You're calling it
No, I'm kidding. Just because I went ahead and did the trade early.
I do think we're gonna rally into the bell. Probably a little overreaction this morning. We'll still be down, but I think we'll be down less than 0.5% on the close.
I should remind you, listeners, as we're finishing off the show here, most of the major indices still in the red. S&P off about 0.2%, and everything else off about similar percentage points out there. And VIX cash still vacillating around that mid 15 handle. And Mr. Meatball, if folks want to get either access to the SVIX newsletter or Andrew flashing people in an alley, where should they go? What should they do?
Yeah, we put out an incredible amount of content every day. I write stuff. Here, go to our YouTube channel, the Option Pit News YouTube channel. Go and find us there.
Is it just the Option Pit or Option Pit?
I think it's just Option Pit. I'll tell you what it is. I'm not going to do that.
Do you have any more of Andrew? I think removing boulders. That was good stuff. I could watch that all day.
I know we put some new stuff on. So yeah, the channel is just Option Pit, and I believe it's at Option Pit 2333. So at Option Pit 2333.
2333.
I'm not sure why it's that, but if you go on YouTube and you search Option Pit, we'll show up.
There you go. Search Option Pit on Twitter. You too can watch Andrew flash people in an alley and remove boulders, and also Mark occasionally talks some SVIX. How's that?
There you go.
If they're not coming for Andrew flashing, I don't know what they're coming for. That's quality content. And Mr. Rhoads, do you have any good tube content you want to plug for the kids?
Oh, well, with Dr. Larissa Ademiak and I, we do various videos. I did one on the 3-day weekend thing with respect to VIX, and we call it Academic Market Insights. We're still in the process. She left me. She was at Kelly with me, and she left me for Purdue. So we're trying to work some issues out around working together when we're at competing schools.
There you go. Academic Market Insights. Since we're all plugging the tubes, make sure you check out our tube. We've been putting up some cool things up there, shorts, a lot of other nuggets, snippets, clips from various shows. A lot of people seem to be liking it and responding out there. A lot of people like to consume their podcasts on YouTube. Hey, we don't judge. Wherever you get it, we welcome you. That's going to do it for us on Vol Views today. Also going to do it for us on the network today. The Hot Options Report already hitting the network as we speak, coming out early today. And oddities for all you pro folks hit last night. If you want to check out the pro, theoptionsinsider.com/pro. No shows on Monday. Obviously, markets closed for a little bit of Labor Day fun. Back again next week, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.